economic Mother Nature is going to step in and swamp the best laid plans with the best weapons of mass financial destruction ever used to manipulate markets and change the world.
Well, ladies and gentlemen, thanks so much for stopping by. We certainly do appreciate your support. We have back on the line our good friend Andy Hoffman from milesfranklin.com, the best economic pundit on planet Earth. Andy, how are you?
Wow, quite an introduction. I'm doing well, and I'll try to live up to it.
Well, well-deserved, Andy. You know you never hit the edit button when it comes to your commentary and telling the truth. And there's so much to talk about. I literally don't even know where to begin, but I think I should probably at least start here because I'm sure you'll have a reaction to this news headline from Zero Hedge this past week. The Swiss government becomes the first ever to issue 10-year debt at a negative yield. The race to the bottom. Where is the bottom, Andy? There is no bottom.
Yes, and the Swiss don't even have the ECB's QE to infinity going on right now, which shows you just how insane the world has gotten. This is the very same government who just months ago said you need to say no to save our Swiss gold because we need to be able to protect the peg with the euro. It's so important that we need all of our resources to do that. Well, 3 weeks later, they went to NERP to protect that peg, and another 3 weeks later they got rid of it entirely. And yet, of course, people are paying for not just for T-bills, for 10-year bonds. They are paying the Swiss government to hold their money. And of course, the reason they're doing so is because they believe that the euro will collapse further and there'll be further flows into the Swiss franc, which ironically will only cause our friend Thomas Jordan over there to go further into negative territory, which will only fuel further inflation in Switzerland, which already has one of the highest costs of living in the world. But don't worry, for the 1% that own stocks, they're doing just great. For everyone else, they just get inflation, which is the story of the whole world.
The stock story is one that really leaves me flummoxed. There is a pundit out there by the name of Lindsey Williams, a pastor who a long time ago, Andy, several years ago now, predicted that the powers that be, based on his influential friend, his insider friend, the powers that be were going to let the stock market run to unimaginable heights, allowing all of the sheep to get in, and then they'd take it down during the big crash. And it seemed unlikely, but here we are approaching Dow 20,000, and I never thought it would get there.
Yeah, but I would disagree with him the way he's posing it. You know, to say they are letting it run, like here in the States and certainly in Europe, where people are even worse economic condition, let alone with their plunging currency, there's extremely low retail participation. That's why I've had trouble calling what's going on in the stock market here a bubble, because people just don't own stocks. They lost their money in stocks. They lost their money in homes in 2007, which is why there's record low retail participation in the stock market and record low home ownership in the States. And why, by the way, CNBC hit its all-time low, as in 25-year low since it went on the air, rating last week. So it's not a matter of people are racing in. The only place that they're racing in is in China, where the government is actively soliciting an equity bubble among the masses to replace the collapsing real estate bubble. And you're seeing, I mean, I saw a chart this week of the growth in margin accounts. I mean, it looks like the biggest of the dot-com bubble stocks. That's how fast people are racing in China, which is why the stock market has doubled in less than a year since the PBOC started aggressively easing monetary policy. But here, it's completely about the government itself supporting the stock market every day, not letting it go down, making sure that the 1% that are still in the market know to buy the dips, to make sure their policy statements continue to say, don't worry, we're going to still keep rates at zero, et cetera, et cetera. We're going to, still be highly accommodative. And again, stock markets go up for many reasons. I mean, the Venezuelan stock market right now is doing the same thing for entirely different reasons. That is truly hyperinflating, like Zimbabwe did 15 years ago, and like Weimar Germany did. But people are losing their money in real terms on the Venezuelan bolivar, which is collapsing. So again, some of it is hyperinflation expectations, some of it is QE and government support, but very little, aside from China, I see is an actual bubble in the retail mentality.
Yeah, and meanwhile in Hong Kong, we see the Hang Seng has gone absolutely parabolic and reached an extreme bubble. So we're seeing this all around the planet. And the Lindsey Williams prediction was really, maybe I misphrased that. He said that the powers that be would run the stock market up, trying to get the sheeple to jump in, and then during the big crash, everyone would lose everything. I just wonder at this point, Andy, when that big crash is coming. And it's a leading question, and answer that how you see fit. But I need to point out for people too that for the last 22 days, the Treasury says the debt has been frozen at $18,112,970,000,000 because it's $25 million below the current legal debt limit. And I love how they do that, Andy. They just turn off the switch as though the government isn't burning through hundreds of billions of dollars a month.
Oh, well, they'll eventually turn that back on. They've done it several times, and it'll go up 300 or $400 billion in a day. But again, they're not trying to get the sheeple in. What they're trying to do, they believe that they're trying to create this wealth effect that will cause the economy to recover, but it doesn't do that. In essence, it causes the 1% to get wealthier, and it causes inflation, for instance, of home prices, which have made it unaffordable. People can't buy houses anymore, and it drives rents up as well. And I was just talking the other day a lot of things that don't get into the CPI, like, for instance, homeowners insurance. Mine I looked, it was $700 7 years ago. Now it's $1,700. And it's because the insurance companies can't generate any interest income because rates have been zero for so long. So they pass it along to us in the form of premiums. And these kind of things don't get into the CPI. So again, they cannot care less about us. They're doing things that are hurting us. They're not enabling us to save. They're not enabling bad companies to go bankrupt. They're creating massive bubbles, for instance, in high-cost shale, which was all junk bond finance thanks to the bubble in bonds, which all have to revert. And they are starting to revert. That's why you're seeing, even in China, I mean, the biggest bubble of all time is collapsing in their construction and real estate and industrial businesses. Look at Europe; it's a basket case on the verge of implosion. I mean, Greece is going to Grexit, and it's going to be a major ripple effect throughout the world. And of course, here, where every real economic indicator is saying that we're at best at a recession. Even the Fed's own tracking mechanism says that we're at zero GDP growth rate right now. So there's only so far that you can spread valuations of financial assets above their reality of the underlying economy. And right now, it is a fact that broadly based stocks are way above the average valuations of 2000. Now, they're not way above the average valuations of internet stocks, but broadly speaking, the valuations are way above it. I mean, I'm looking today. I was just on the screen the other day. I was at the gym and I see them talking about these restaurants. I mean, we're talking about internet-like movements right now in restaurant stocks, and not like, the best restaurants. We're talking about Popeye's Kitchen, Chipotle. I mean, that's what they've created, these massive bubbles that either by hyperinflation or by crash are going to be unwound in real terms. It's only a matter of time. And that's the beauty of economic Mother Nature. She cannot be usurped. And the powers that be can say all they want. We're going to run the stock as high as we can. That's the whole point, as high as they can. But they can't run it infinitely, because either it's going to cause hyperinflation or it's going to cause dislocation of currencies, commodities, economies. And a lot of that is happening right now, and it's only going to get worse as this Ponzi scheme, which must grow larger, continues to inflate.
Well, let's talk a little bit about the Fed and the Fed minutes. I know you wrote an article earlier in the week, Fed Transparency Revealed by Mr. Goldman Sachs himself. What's your take on what the Fed's up to and what they're claiming to be up to publicly?
Well, again, the Fed, I've said all along, the Fed cares about one thing and one thing only, and the same with the ECB and the Bank of Japan. They care about the stock market. A lot of these people on their boards are stupid enough to believe that rising stock market means that the economy will improve, without having looked to see that after all these years of doing so, the underlying economies of the world have never been worse. I mean, certainly not in our lifetimes. You'd probably have to go back to the Great Depression or maybe the end of World War II in Europe to find a time where the economy was this bad. And of course, back then they had a stable currency, whereas now they have imploding fiat currencies. But no, their goal is simply to make sure the stock market stays up. And even Bill Dudley, that's Mr. Goldman Sachs himself, he said the same in a speech yesterday about, we'll do things according to how the market reacts, when their job should be to be independent of the markets to be, to take the punch bowl away when it needs to be taken away and to theoretically add when it needs it. Of course, it now needs it all the time. So yeah, they say all the time, well, we'll wait a considerable amount of time, but the market wants us to say that the economy is recovering, so we'll just change that to patient. And then when they say we want more, we'll change patient to, well, we just won't do it next meeting, but we are very worried, et cetera, or data dependent. So again, it's just a matter of, there's, I think, 120 people sit in each one of those FOMC meetings, 120 people that we pay with our tax dollars to just redline a statement, to just make it seem like that, yeah, we are confident in the economy, but we're also cautious. Don't worry, we're not going to, do anything stupid, and we'll tell you beforehand if we're even considering it. So again, when it comes to these minutes, they're even worse. They've just simply become gold attack, as I call them, key attack events. I mean, absolutely nothing was said in those minutes. There never is. In fact, the only time there ever was something said in the minutes was the last minutes, not this one, the last one, when they took what was theoretically a hawkish position and completely changed it because the markets were falling. And I've said all along, what they do is they doctor the minutes. They see what's happened in the 4 or 6 weeks after the meeting, and then they cater the minutes to what the market wants to hear. And, it couldn't be more obvious last time. And certainly they put it as their top line, Fed governors divided over whether to raise rates in June. Well, yeah, that's what they said several months ago. And since then, the economic data has been worse, and it will continue to worsen.
Well, Andy, why don't we bridge over to precious metals then? And I think a good way to do that actually would be to quote your colleague, Bill Holter, who we interviewed just the other day. And he writes in his latest article, Ignorant Depositors, the plan for today was to pen an article regarding silver. I believe silver to be the cheapest, most undervalued asset on the planet. From these current levels, I believe any capital in silver is a no-brainer. Andy, I personally couldn't agree more, and I have to believe that that's your feeling as well, given that silver is still well under the cost of production at current prices. Let's talk a little bit about precious metals. What is your take right now on the current prices of gold and silver? And then I do want to talk a little bit about the SGE.
Well, look, this Saturday is the 2-year anniversary of the historic closed-door meeting between Obama and the heads of the too big to fail banks. The day before, coincident with Goldman Sachs issuing a aggressive short sale recommendation on gold, and the day before, what I call the alternative currencies destruction, where gold was taken down $250 and silver $5 in 2 days for absolutely no reason. And since that time, not only have precious metals been just absolutely, astonishingly suppressed. Taking all the years prior, cumulatively, it doesn't compare to what we've seen the past 2 years. But the same thing has gone for the stock market, which literally is never allowed to fall anymore. And of course, the economic data has been so horribly fudged, it's getting to be a joke at this point. And this is all, 2 years ago, right when QE3 was starting, right when Abenomics was starting. So, we're at this strange place where they've clearly overdone it to the point where they've pretty much put the mining industry on the verge of collapse. I've said this all along. We have seen peak gold, there's no doubt, and peak silver is probably right behind it, potentially far more so, because silver is so dependent on base metal production, and since the global economy is collapsing, there's no likelihood of increased supply of base metals, probably going to be a decrease, and likely silver as well. As for the miners themselves, they've never been more insolvent. You'd have to go back to before gold bull market started when they were in this bad shape, which is why, like you saw Shell buying British Gas earlier this week, you're going to see the same thing in the miners. They're going to all start aggressively consolidating and cut what is already massively cut capital expenditures to the bone and firing people and shutting in mines. And it's going to cause a massive supply disruption. Meanwhile, the demand, it's a very opaque market, and the powers that be do their best to hide it from you. But Chinese demand on the Shanghai Exchange, for instance, is up 15% year over year, and last year was an all-time high. And of course, in India, even with them not getting rid of all those tariffs, demand has been going up, and it's only going to go up more because of all these currencies around the world that are crashing. Look at the dollar index today, which again, I 2 years ago, not 2 months ago, 2 years ago said this would happen. I said, just like in '08, you'll see the dollar explode higher as the global economy collapses. And what it does is cause, first of all, gold to go up in all these currencies, and it causes massive inflation. So again, demand for gold is only going to surge, and silver, of course, and supply is going to go down. So whether you believe that the powers that be have the ability to keep this game going further and take the Dow as high as they can and push gold and silver down, there's a floor down here, which is the cost of production and the ability of miners to stay solvent.
Well, that's true, and it reminds me of a man I used to look up to when I was younger and naiver. Is that a word? When I
Yes.
was when I was younger and more naive, and that's Warren Buffett, because I would have to believe that a young Warren Buffett, starting out in the world trying to make his first billion, would definitely be looking at silver and acquiring silver, because anytime you can get an asset below the cost of production, that is absolutely, as Bill Holter says, a no-brainer. Of course, now we know Warren Buffett likes to do things like bail out Goldman Sachs and chum around with bankers and people named Rothschild. So, but Andy, don't you think a younger Warren Buffett would be all over silver? Heck, he once was, wasn't he?
Well, first of all, he didn't bail out Goldman Sachs. The government bailed out Goldman Sachs and used him as the front man to do so. In fact, the government bailed out Berkshire Hathaway, and a big reason that they bailed out Goldman Sachs and the rest were Berkshire Hathaway's exposure to them. I mean, in exchange for his representation that things were all right as the world's most famous investor, he was given all kinds of perks, including the ridiculous deals he got with General Electric and Goldman Sachs. And of course, bailing out his own derivatives positions, which ironically he had called weapons of mass financial destruction just a few years before he heavily invested them and almost lost his whole company based on it. I mean, look, he's just a guy like Alan Greenspan, who once knew. Alan Greenspan was wrote Golden Economic Freedom. And of course, Warren Buffett's father was probably the most precious metal gold bug in the entire history of Congress. I think his name was Howard Buffett. And he did, in fact, own silver at one time. And, it seems likely that because of all the issues he ran into with his derivatives, that the government got a hold of his silver because, coincidentally, the exact amount of the holdings of SLV when it first went public was the exact amount that Warren Buffett supposedly owned. And he never really said what happened to it other than that he was somehow, like, quote, forced to get rid of it. And he never said why. But that's another story. From a value perspective, which is what he is famous for, or was famous for, of course, I mean, you have falling supply and rising demand. I mean, what more two things, and no inventories on top of that.
Right.
What more could you ask for in an investment, other than the fact that I don't view silver as an investment, but savings and insurance. Over time, of course, it's going to preserve your purchasing power. It's the only form, it's the only actual thing that is actually the definition, meets all the definitional parameters of money and has with gold for the past 5,000 years. And look at what the situation we're in now, where we're at the end of the biggest fiat currency regime of all time, exploding debt, plunging currencies. Now, with the price below the cost of production, what better value investment is there going to be?
Well, and that's my point. I think that's Bill Holter's point. If you have any capital at all and you don't want to risk it in this stock market bubble, precious metals in physical form is a logical thing to consider. It's logical, and it's about the only asset out there that isn't in a bubble at this point, Andy. And maybe that's a good way to bridge over to the SGE just briefly, because I have heard others say, and I think Bill Holter said it, that when the SGE finally goes fully 100% live, they'll be setting the prices for silver and gold, and it'll take down the LBMA and the COMEX, and finally we'll see real fair pricing. And it's causing a little confusion because I know that to some degree the SGE is live. Maybe I should get SRS Rocco on the line to help us out with this question. But what is your understanding of the SGE? Is it fully live? Is it not live? When will it go fully live?
Yeah, well, either him or Koos Jansen, who probably is the authority, and then of course there's Ned Leland. He's an expert on what's going on with that as well.
Right.
But look, it's all a mosaic to me. It's only part of the puzzle. You really just have to go back to what Bill Murphy and Chris Powell were saying 15 years ago. Look, when physical demand swamps the paper manipulators and they run out of physical to supply the growing demand, that's when it ends. And we're at the point where they're running out of supply, clearly, because it's tightening around the world as demand increases. The supply is tightening. And now they've destroyed the mining industry, so there's no more supply that's going to be added on. As for these exchanges, there's always something that's out there, just like there's always something that's going to make us energy independent, and it always fails. There's always something out there that's going to imminently cause the end of the COMEX. The COMEX is going to go. They clearly don't have the inventories they say they have, which, by the way, they don't say they have that much. And the same goes for the LBMA. The fraud is rampant and transparent and becoming more well known each day. But in China, look, that's where the buying is. They're the biggest producers. They're the biggest consumers by far. And as a result, we're going to migrate the price discovery mechanism there in time. Some things have been great successes. They've been increasing the ability of the average person to buy there over the years, and they have. They're now instituting these exchanges and the Beijing Free Trade Zone, which has made it more difficult to measure how much gold's going in, but it's certainly made it easier for gold to go in. And this new exchange, I've heard, yes, it's going to change the world, and I'm not sure. I think something started there on the 20th of March, but clearly it's not big enough. The ironic thing is the amount of deliveries that go on in China dwarf the amount that go on over here. But the amount of trading of paper, which ultimately has been setting the price, still is dominated over here. And, when will that end? I don't know. It could end overnight because of some crazy black swan event, or it could take time. But, let's pick a time. 5 years from now, do you really think that we're going to wake up every day at 2:15 a.m. to see paper gold down? No, of course not. At some point, it will dominate the trading, and we'll wake up here in the West to see that the price moves for the day have already happened.
Well, why don't we wrap up the call with this bit of news? Jamie Dimon is warning in his latest letter to shareholders that another crisis is coming. The Treasury flash crash and similar recent events in currency markets are, quote, shots across the bow, is what Jamie Dimon has been saying in his letter to shareholders. The JPM chief goes on to warn, as we have for years, that declining liquidity in credit markets is likely to exacerbate future crisis. Quote, the likely explanation for the lower depth in almost all bond markets is that inventories of market makers' positions are dramatically lower than in the past. For instance, the total inventory of treasuries readily available to market makers today is 1.7 trillion, down from 2.7 trillion at its peak in 2007. The trend in dealer positions of corporate bonds is similar, end quote. I don't get my news from Jamie Dimon. What's your take when a guy like Jamie Dimon says another crisis is coming?
Well,
He's kind of stating the obvious, isn't he?
On the surface, of course, he's right. All those things he's talking about are exactly what I started this call with. The ramifications. Like when you QE up everything in sight and there's nothing left to buy, how do you keep buying more? And what about the repo markets and the other ways that liquidity is required, the interbank markets that get destroyed by these things? Now, the liquidity, the flash crashes, that has nothing to do with that. That has to do with high frequency algorithms. The government has fostered and allowed these businesses to take over the markets. And of course, the government is the biggest user of high frequency algorithms through the JP Morgans and the Goldman Sachses. So it's kind of like he's saying, yes, this is what's going on. This is what I do for a living. My job is to take the liquidity out of the market that creates these conditions. As a result, it theoretically stabilizes the market and makes me very rich. But I'm telling you what I do as the partner of the government. So yeah, he's telling the truth. But the fact is, he's the reason that it happens, and of course, that's what I'm talking about. It's the ramifications. Economic Mother Nature is going to step in and swamp the best laid plans with the best weapons of mass financial destruction ever used to manipulate markets and change the world. It's going to happen, probably sooner rather than later, and maybe it's as simple as Greece doesn't make their payment next week, or maybe it's something we don't know about yet, but it's going to happen. And we're going to have our 2008 crisis or so. And this time around, there'll be no way to bail it out because there's no more balance sheet ammunition for banks, for central banks, for governments, for anybody.
Well, what you're describing is a collapse, and you and I like to get together often to document the collapse. And I don't know what it's going to look like post-collapse, Andy, but I think it's going to be dark, and it's definitely going to be scary. There's a lot of unknowns. But I guess at the end of the day, Andy, those of us who hold precious metals ought to find some sense of relief for having made that decision to try to diversify into some tangible asset that isn't beholden to the paper markets and isn't beholden to a bank and isn't beholden to counterparty risk and isn't beholden to this complete Ponzi debt structure, which is going to implode. Again, $18.1 trillion in debt. They hit the ceiling of the debt limit and they just stop the numbers as though they're not spending the money. It won't be long before we're at 25 trillion, 30 trillion, 50 trillion in debt. It can't go on forever. How do people work with you guys, Andy, to get precious metals?
Remember, Miles Franklin, Precious Metals, been around for 26 years, A+ Better Business Bureau rating. We have our free blog every day featuring myself, Bill Holter, and David Scheckman. You can call us at 800-822-8080 or email me at ahoffman@milesfranklin.com.
All right. Thanks, Andy. Thanks for joining us. We do appreciate it. And guys, thank you for joining us. Thanks for spreading this information, sharing it with others through your own social networks on Twitter, etc. And thanks for hitting the like button. We very much appreciate it. Stop by SGT Report, thelibertymill.com, and thephaser.com for real news 24/7. Have a terrific week. God bless.